Hello, everyone. Welcome back to a very special video that we're doing for you all today regarding Ohio National's demutualization. If you are a current client with Ohio National or you're a current advisor, you may have heard a lot about what's happening in the insurance world right now, specifically with Ohio National. But the reason for us to make this video is because there's been a lot of misinformation, especially on YouTube and other social media channels about what this means and what you should be doing. So we at QX Financial, since we have work and we work currently with Ohio National, we figured it makes sense for us to make a small video for you guys to learn what's really happening, get rid of all the sales speech and everything that's going on and try to give you an objective view of what's going on. It took us a couple of weeks to do this because we decided to wait until the dust settled after the announcement back in March the 23rd. We didn't want to rush into just, put something out there for clickbait and trying to, get to the top of Google or whatever. So we wanted to give you the best information that we could. So now that we have talked to the company, now that the company has announced more details about this transaction, we figure this is the best time to have a conversation with you about what's going on, what does it mean, and then how are we going to be moving forward. So I hope you guys enjoy it. Before we get started, as always, the QX Financial Dream Team is here with Scoba Rhodes, Sonia, and Terrell. Thank you for being here today.
Thank you for having us.
Thank you for having us.
All right. So let's get going. So the first question that we want to address is, what is demutualization and why is it happening right now? So Scoba, tell us a little bit more about that. What is a demutualization process and why is that happening right now?
Well, demutualization is, in basic terms, it's a company that was mutualized, which means that it didn't have stockholders. It had, members, and members had voting rights, and they actually participated in decisions, profit, and growth, or unfortunately, in some cases, loss, whatever. Every member was a part of the company.
Right.
Now, a stock company has a board of shareholders, and the shareholders make decisions, and they really make decisions on a quarterly basis based on profit and loss. And each is just a different way of running a company.
Right.
What Ohio National has done is gone into a partnership. I'll speak a little bit about that later, with a company Canada called Constellation. They are providing a framework and a financial backing, substantial actually, it's almost, $500 million, of being able to convert Ohio National Mutual Holdings from a mutual company to a stock company. Constellation, it's a privately held insurance company. It's going to help serve as a building platform to help Ohio National Mutual Holdings is to maintain its financial strength to be able to serve all the clients, members, policyholders of Ohio National for now, and we hope strengthening our position for many, many years to come.
Yes, and that's the first thing that we wanted to address with you guys, that I've seen a lot of articles out there that Ohio National is going away, Ohio National is a distressed asset, blah, blah, blah. That couldn't be farther from the truth as far as we know and as far as has been announced. Actually, this is an injection of capital, as Scoba is saying, to make the company perform better, to bring more value to the consumer and to stay around for the long haul. Ohio National has been around for over 100 years as it is already. So again, none of that has changed. And another good point that Scoba makes here is that Constellation is a privately held company. So even though Ohio National is converted into a stock company, we're doing it only for the purpose of being owned or controlled by another company, in this case, Constellation. So this is not going to be a publicly traded stock or anything like that, or Ohio National becoming a publicly traded company. Is only going to be, it's a private scenario, so they can take ownership of the company. And just to clarify one more point for those of you that are watching this video, we are not employees of Ohio National. We do not work for Ohio National. We are independent financial advisors and insurance agents. So we work for you, the consumer. So we have no need to be pitching the company line, I guess I can call that. Okay, but that's really what's going on. That is what's happening. All right. So the next question I have is, if you have a life or annuity company as a client with Ohio National, how will this affect me? Should I be worried? So Terrell, can you tell us a little bit about that?
I think that just dives in back to what we try to really help our clients understand in the beginning, why we're using one of these tools as a financial advantage. It's giving you that grounded guarantee. It's a contract. So whatever they signed up for is guaranteed. So it doesn't matter what the company decides to do going forward. Everything that's in their contract is already signed. Besides that small moving piece of the dividend, they have nothing to worry about. It's more the new clients coming on in the future that have to worry about the changes. So currently, it doesn't affect anybody with a contract, which is why we get people into some of these tools so they can get these guarantees locked into place.
That is very important because, again, we've seen a lot of videos out there, a lot of blogs, a lot of articles about, hey, you should get out of your contract. You should do a 1035 exchange. There's a guy out there talking about borrowing to buy another policy instead. And there's all this stuff going around. Nothing has changed as of today, which is April 23rd of 2021. This hasn't gone through and no change has happened. We're not advising our clients to make any decisions on this right now. The only thing that has changed for future policyholders is the dividend went down a little bit, which we're going to address in a little bit. But all the other elements of Ohio National's, especially whole life clients, which is mostly what we do, whole life contracts, remains the same. So that's a very important point that you're making, Terrell. Thank you for that. The next question that I have here is, what are the benefits for the participants, the clients in this transaction, and what are the benefits for Ohio National of what's going on? So Sonia, can you tell us about that?
Sure. Well, as you mentioned before, the dust is still settling, and it's still subject to the approval of the Ohio Director of Insurance, as well as the approval of the eligible members of Ohio National Mutual Holding Company. So a lot of things have to happen before it's a done deal.
Right.
So, of course, the eligible members will be compensated for the transfer of ownership interest. And the consideration is about $500 million. And it will be compensating these eligible members in the form of either benefits, policy benefits, or cash payments. So, and in addition, Constellation will also provide Ohio National with an infusion of $500 million to improve their infrastructure, strengthen their balance sheet, and offer more innovative products to new customers.
Exactly right. So the idea here is to help the company continue to provide the valuable service that is providing to you as a client, to all of you out there, and for us as advisors to continue working with them and move forward. Again, this is a very, very in contrast to what we're seeing out there in social media about, Ohio National is a distressed asset because, they're only receiving $1 billion. Ohio National is a $40 billion company that, like I said, has been around for a long, long time, over 100 years. So what they're trying to do, according to the announcement, is to restructure themselves for the 21st century, which if you're a policyholder, that is a good thing.
Yeah.
That is what you want. Exactly right. We don't want to be in a situation where things go bad or they can't do business anymore, right? Which has happened to other carriers out there.
Right.
All right.
Yeah, I was reading the letter, and nothing in there indicated that this is a distressed sale or anything like that. And if you research the party who is in contention to buy an ownership stake in the company, yeah, they're a pension company. It's a Constellation is a holding company made up of two pension companies. So,
Exactly right. And they're trying to have a stake on the company for the long term. They're looking for yields. They're not looking to take it apart. At least, again, that's what's been announced as of April 23rd of 2021. They have no intention to dismember the company. This is not a private equity firm or anything like that. It's a pension. It's a pension plan out of Quebec. They're trying to find yield just like anybody else. So that leads into actually to my next point, which is what's going on with that dividend. Especially advisors are hitting that hard right now on social media, right? Oh, the dividend is going down. My God, the dividend, and they're freaking out about the dividend. The dividend is important, but something that we want to tell you as clients is that everybody is being affected by the low interest rate environment that we have had really since 2008. It's been almost 12 years or close to 0% interest rates out there in the marketplace. I mean, right now, the 10-year treasury as of today, I looked it up an hour ago, it was about 1.5%. So the yield is low, and the responsible thing to do is for companies to adjust their dividends. They cannot pay what they're not earning. Otherwise, they run into trouble. So what's happening is that other companies, not to mention names, but there's other mutual carriers that what they're doing is they're padding their dividend by subsidizing it. This is very important if you own a policy or with any of these carriers, because at some point they are going to have to adjust as well. Gravity affects everybody the same, right? So just because they're taking profit from other product lines to paddle their dividend, yeah, it makes the illustration looks good, but that doesn't mean that it's sustainable. And just to share a bit of data with all of you, last year, the top 4 mutual companies in the United States made about 4.1% in their portfolio of assets. However, yet their average dividend was 5.61. You cannot earn 4.1 and pay 5.6. Can't do that. At some point, they're going to have to adjust. So again, if you get a phone call, you're like, oh, no, our dividend is better and it's significantly higher, slow down, exactly, time out. You don't play in a different market. All of us are in the same market and affected by the same interest rate. So that is very, very important. Now, another question that I would like to ask Koba here is most of our clients are buying a whole life, but they're buying it for banking reasons, right? We use the becoming your own banker concept. So can you give us a brief touch reminder, Koba, of what becoming your own banker is?
Well, becoming your own banker means instead of acting like a pure consumer, you're acting like a bank. So when people place their money, well, let me start over. Banks really don't operate with their own money. They operate with our money. They take our money and then lend it to this person, lend it to this business, make this credit card, and they give us 0.9% on our money and collect 18, 22, 7 on the same dollar that they've given to everyone else.
Mm-hmm.
One thing that a properly structured life insurance plan does is it allows us, the individual, to do exactly the same thing. To take money, use it for this purpose, use it for that purpose, but we're using the same dollar. And we're not even using our dollar, we're using the dollar of the insurance company. And then as we reap the financial benefits of whatever transactions we do, we put that back into the cash value account of the life insurance policy, and we keep that.
Exactly.
As opposed to when the bank does it, we have our money, but the bank keeps all the profit that it did with that dollar.
Exactly
what we're
right.
doing is keeping that product, keeping the profit of our dollar in the first place.
Exactly right. So if you buy this policy for banking purposes, nothing that has been announced actually affects you in any way. So there's no reason why to make a change. Now, another big part of the banking idea is to reduce or eliminate opportunity costs. So Terrell, how would you define opportunity cost?
Talking about opportunity costs, it's obviously the idea that can I use my money, but at the same time, keep it growing, keep it compounding. So, we reference the idea of a two-way street, where not only is my money continually compounding, but at the same time, I can use this money to pay for the things I'm already going to finance. This is our concept of banking. Why not use that money with financing to also finance our savings, thus becoming more efficient with our dollars?
Exactly right. And we also leveraging on it for tax purposes. So Sonia, are any of the income and capital gains tax benefits of life insurance, are they in any way going to change because of what was announced?
Not at all. The core benefits that you're getting do not change as a policyholder. You're locked in by a contract.
Exactly right. So everything, guys, that Terrell and Scoba and Sonia just mentioned is what we call participating whole life, is what we call non-direct recognition. That's what we call paid-up insurance. Those are the industry names that we use for what we just described, and none of those things are going away. They actually continue, and also even in new issues, Ohio National will continue to provide those benefits. So from that perspective, if you're using your whole life contract as a bank, as an emergency fund, as a retirement strategy, none of this really affects you because the dividend is only one component of the contract. Especially if you're banking, most of your benefits will actually come from capturing that opportunity cost that Terrell was talking about, was by channeling money to your contract and stop making and transferring payments to other people. As Kova mentioned, instead of the bank making the money, we are making the money. But that is not coming from the dividend. It's coming from how we organize our financial affairs. So none of that is affected at all whatsoever by the announcement that was made today. There is one last point that I would like to share with all of you, which is the updated version of the 7702A rule that happened at the end of last year. Again, this is more like for the insurance wonks that want to know the details, but if you own an insurance contract, you may have the ability to actually pour more money into your contract and take advantage of the tax benefits of life insurance for the same death benefit, and actually lowering your costs. That is very important, and that by far is going to offset any type of dividend adjustments that the insurance companies will make. Because it used to be that the insurance companies had to provide a guarantee of a certain interest rate, and now that has changed to more to reality, allowing us to actually put more money away and still take advantage of the tax benefits of life insurance and everything we talked about for a lower cost. So actually, I'll close with this point with all of you. It is our view that things are better than ever to some extent, right? Things are getting better. So again, if you're watching those videos that, it's all doom and gloom, it's the end of the world and blah, blah, we should just cancel everything, whatever, because companies are making adjustments. That's not the way the world works. So hopefully this is helping all of you guys. So back to you, back to the team, back to you guys. Is there any other points that we should make for our clients and for people watching this video?
I would say everyone just needs to take a moment to breathe and, just reread the news and digest it, mentally digest it. Don't allow anyone to hijack your emotions or trigger any fears. Just read the information. You can even research the companies that are, in contention to be the new owners. And if you're a current policyholder, it shouldn't change the terms of the contract.
Yep, I agree with Sonia. Make an educated decision. Do not make an emotional decision.
Correct.
Exactly right. All right. Well, it seems like it's all for today. Thank you guys for sticking around for the whole length of this video. We really appreciate it. As always, our information is running down below. If we can help in any way, help you educate the decision that you're going to make, please let us know whether you're applying or not. We are here to help. If you have any questions, again, let us know. Last thing, around the comments, right on the summary section, is going to be a link to a website called advancingohionational.com, where you're going to see a lot of their announcements and their handles that they're providing clients with. And also there will be a link to a frequently asked question PDF document, so you can read more about it and learn about what's going on. But thank you, Dream Team, to be here today with us. I appreciate it. And for the rest of you, look forward to seeing you in the next video.
Thank you.
Thank you.
Bye-bye.
Bye.